Okay, just checking, guys, if you are able to hear me. Hang on, let me just remove this. And all right, fantastic, guys. Can you hear me? And can you see me? Let me know in the chat, guys. All right, hang on. Let me just make sure that I turn on the chat so that you guys can see me. Can you guys hear me and see me, guys? Let me know in the chat. All right. Rick says yes. Fantastic. Eddie says yes. Okay, great stuff. Let me know, guys, if you can hear me. Just let me know in the chat so that we can get started on our live. So today we actually have a very, very interesting topic. Okay, so I'll say yes, yes. Handsome Jewel. Thank you. Okay. Let me say yes. Okay, great. So today we actually have a very, very interesting topic. Okay, before I reveal to you the topic, okay, just checking out. Do you guys know what is the topic of our discussion for today? Any one of you guys know? If you actually seen the what do you call that? If you've seen the title, you would know lah. Do you guys know what's the title? What's our topic for today? Okay, you guys know or not? Let me share my screen first. Give me a second. Let's go to the charts. Okay. You guys can see my chart. Okay, wait. Okay, can see. Okay, so the topic of today's sharing is $100 versus $1,000. Does size matter? Okay. Now, guys, before we continue, let me ask you first. What do you guys think? Do you guys think does size matter or not? Do you think does size matter or not? How do I remove this? Remove. Okay, great. Does size matter? What do you guys think? Yes or no? Do you think that if you have a bigger account size versus you have a smaller account size, is it important or is it does it matter? Is it important? Okay, a lot of you guys say yes, yes. Okay, and yes. Wonderland Whisker say yes. Soma says yes. HL says yes. Okay, so a lot of you say yes, it does matter. Okay, very good. Good. Ace also say yes. Okay, fantastic. Okay, now first up, I would say good answers. But let's dive in a little bit deeper. So that's the purpose of our sharing for today, right? Or you know what I'm going to go through is that how does it affect and does it really matter? Okay, so to start off this sharing, okay, I would like to actually talk a little bit about the beauty of Forex. I mean, Forex is great because, to be honest, you can actually start off with small capital. Right? When I talk about small capital, I would say even $100, you are able to start Forex. Okay. Now, since we are in this topic, right, let me just ask you guys, how many of you here you have a smaller size capital? When I say smaller size, like super small, $100 and below. Type in S for small. Okay. Type in S for small. How many of you here you have more than $1,000? Okay, if more than $1,000 in this context, I will consider it as big. Okay, so type in S if you are less than 100. Type in B if you have more than 1,000. S for small. Okay, and then B for big. Okay, I just put big more than 1,000. Okay, small. Small less than, okay, small is 100 and below. Okay, let me know in the chat, guys. Okay, a lot of you say B. Okay, some of you small. Juliana say S. Okay, S small. Less than $100. You have less than $100. CST say S. Okay, HK says B. Wani says B. Okay, she knows the B says S. Okay, user, not sure who you are, says big. more than 1,000. Okay, fantastic. So again, like I mentioned, in the context of Forex, okay, you are able to trade, right, or enter trades even with as little as $100. There are some people who I've seen enter trades with $50 or even lesser as well. All right, so you can do that. Now, if you compare this with trading in the stock market, right, or even stock market or doing options trading, this is something that is unheard of, right? So for those of you who are coming from the stock investing world, right, you will hear of this, how can you do that? How can you enter trades with lesser than $100? Right? If you have any of you here, you are from the stock investing world, what is the minimum you need to do, you need to have in order to take trades on the stock market? Anyone of you know? Anyone of you know? What must you have? I mean, what is the capital size that you need to have in order to take trades in the stock market? You guys know? Yes, no? Let me know in the chat. If you do, just type in the number. If you don't know, then just say DK for don't know. Then I'll tell you. For stock investing, I'm talking about stock investing, just so that you have some context, right? So that you know the difference. Okay, let's see whether you guys know or not. Okay, A say 5K. Okay, good try. Okay, how about the rest? Come, share with me in the chat. Wani say don't know. Okay, anyone else? Wonderland Whisker say don't know. Nathan say 3K. Okay, all are very far from the actual answer. This I'm talking about stock investing 500. Okay, all your answers are wrong guys. Okay, let me tell you if you are trading stocks for day trading especially, all right, a lot of the companies or a lot of the brokerages require you to have at least 25,000. Glenn mentioned correctly. All right, so you're a bit slow. Glenn mentioned correctly. 25K margin. So if you don't have 25K, how are you going to trade stocks in the stock market? Right, that's why a lot of people started off with or flock towards forex trading. Personally, that was one of the reasons that got me interested into stock trading as well. Right, that you're able to start with a small capital. And to tell you the truth, right, when I first started few years back, I also started with $100 capital only. Right, I just started small, but the good thing is that I was able to flip that $100 into bigger amounts. That was what I did when I started. All right, for those of you who follow me, who have heard my story, you know that I turned like $100 into $200, $200 into $400, so on and so forth. Just keep on like flipping, doubling the account. Okay, anyone of you know what I'm saying? If you know what I'm saying, type in me in the chat. All right, you double your account. Supreme Leader says stocks are boring. Well, I mean, there are some people that like stocks. All right, some people think that it's boring. Different strokes for different folks. If I were to put it that way, right? Different strokes for different folks. Okay, so this was what I did when I started off with a small capital. Now let me ask you, is that a good thing? Full margin flip. Correct. Anyone of you done this before? Right, you just whack the account, right? Because smaller account, right? So the good thing is that your losses are capped, right? If $100, you are willing to lose $100, therefore you can flip accounts easily. Okay, so I just note down here, flipping accounts, right, with small capital. Okay, of course losses are capped because capped, right? Because you think about it, it's only $100 that you are losing, right? There's nothing more than that, right? If you have a big account, like let's just say if you have $10,000, right? Cannot be you want to go and flip your account, right? You want to full margin on a $10,000 account, $50,000 account, then that would mean that you are risking a little bit too much. But $100 account still possible, all right? However, let me ask you, is this a good thing or not? Being able to flip accounts. What do you guys think? If good, type in G for good. Okay. If not good, type in NG for not good. What do you guys think? Good or not? Okay. We look at the charts a little bit later. Let's go through this first. I just want to cover this first. Then after that, we go and see the charts a little bit. But what you guys think? Good or not good? Good. Supreme Leader Kim Jong-un say good. A say good. Wani say no good. User say good. Okay, to be honest, actually it depends on how you look at it. Personally, I see it as not very good thing, huh? Because why? I was inculcating in myself bad habits. What's the bad habit? Right? When you flip accounts, yes, you are able to make money very quickly. But one thing that you are not taking care of is your what? Money management. All right. So this is something that if you are starting off, right? Okay, these are some important things that you want to take note of. Money management, right? Or risk management. In this sense, you are risking your whole account, okay, just so that you can double it. This is something that people also always do with news, trading the news, right? So just before a news event, all right, they just go all in, full margin, like buy or sell. And then when the price spike up, right, and or spike down, they will make money or lose the entire, account, $100 whatsoever, right? So this is, I would say, don't you think that is like gambling? Do you consider it as gambling? What do you guys think? Is it considered like gambling? Supreme Leader asks, you separate the $100 from the main account. Yeah, exactly. So basically what you're doing is that you take just a small portion, right, in order to like flip this lah. Okay, gamble. Okay, why? So you say no. Okay, how about the rest of you guys? What do you guys think? Do you think it's like gambling? Right, when you are flipping the accounts, and you are, as I say, when you are trading the news, right? You go full margin on the news, buy or sell, and that's just before the news release, right? And then when the news release, suddenly the thing spike. It's either you make a lot of money from your $100 or you blow the entire $100. Okay, what do you guys think? Right? David say yes, it's like gambling. Okay, Adam say no, it's not like gambling. Right? Bus stop or bus stop? Bus stop, sell stop. You mean buy stop? Are you talking about buy stop? Buy stop. Okay, buy stop and sell stop. Okay. Well, okay. So if you ask me now, okay, personally, I mean, trading the news, especially, I feel that it's a bit of a gamble, all right, because the the news especially moves on sentiment. Okay, so when you talk about trading news, sometimes good news, but then price goes against you. Have anyone of you experienced before? Right. So for example, okay, let's just say we expect that price is that the results for, let's just say, CPI, right, inflation report, it's supposed to be good results. And usually when it's good results, okay, as in good results, as in the inflation is low, USD is going to be stronger, right? But then suddenly, right, let's just see, we are trading gold. When you trade, when USD is supposed to be stronger, okay, so if I were to add another, right, for example, so when USD supposed to be stronger, right, what will happen to gold? XAU, what will happen to XAU? XAU go up or down? If USD supposed to be stronger, okay, USD go up, XAU, which is gold, supposed to go up or supposed to go down? Right? XAU supposed to go down, right? Okay, but sometimes it go against you. That means you say I'm supposed to go down, you sell, because you wanted to sell, right? You predict you will go down, suddenly you go all the way up. So in that sense, right, it goes against you. Because why? A lot of times trading the news also has to do with market sentiment, right? So maybe people think that, oh, it's fearful, that's why they it is uncertainty, right? So that's why they prefer to put their money in gold, so then the gold price go up, shoot up instead. So that's the issue. Okay, trading news sometimes can be based on sentiment as well. All right, so I just write down here. Okay, trading news. Okay, trading the news can be, all right, sentiment based. All right, so you need to be careful with that. All right, doesn't mean that you cannot. Personally, right now, nowadays, I don't really look at trade the news so much, but I would say that the news usually acts as a catalyst, right, to move price faster to a certain direction. Okay, let's just say it's supposed to go down before it go up. The news help it to accelerate it, move much faster. Okay, now that's not part of the today's topic, right? Today's topic is supposed to be, does size matter, right? Trading $100 versus $1,000. All right. So now coming back to this, right? I would say that if you are starting off, all right, if you're completely new, okay, use the small account, right? Let's just say you only have $100, right? Use that small account, right, more as education. Okay, use it in a way that you, when you are learning, you are only risking a small amount of your money. Right, that's what I did when I started, and this is what I can also encourage those of you who don't have that much capital to also start off with. If you only have $100, right, make sure that is money that you can afford to lose, because especially when you're learning, you are trying this new thing out, right? You're not sure whether it can actually work or not, and again, you are still learning. Okay, you haven't mastered it yet, so there is a chance that you might lose the entire thing. So what do? Don't go and, right, risk the whole thing just like that lah. All right, you want to be able to, you know, manage your risk still. Okay, and yeah, I think more importantly is manage the risk lah. Okay, so far understand lah. Burst the account. Face orange, biting nails. Bowen say hi, Julian. Oh, hello, Bowen. Okay, so you guys understand. So use it as education, right? Amount that you can afford to lose, amount that you can afford, like even if it goes down the drain, that's still fine with you. All right, so use this as your education base. And one thing you can do is that you can actually I mean, if you want to flip accounts, again, that's something that I leave up to you. Personally, I wouldn't encourage that. I would rather you use it to do the second thing. Build discipline. All right, this is very, very important. Okay, so my mistake was trying to keep on flipping the accounts. But one thing that I didn't actually do was build discipline in myself. Now, I want to share with you an example right here. Some of you may have seen me share this before. Okay, so let me just see if I can show you guys. Okay, over here. So this one I actually recently shared in Genesis Pips, the Telegram. Right, some of you may have seen. Okay, you can see one of my students here. He was actually withdrawing, right, 2 times his salary. All right, you can see right here 5,000 in the second week. So basically, you have 2 accounts, 5,500 in one account, and then 6,300 in another account that he withdraw. Okay, this is using prop firms, which means that he was actually he generated about 80% of the profit. So this amount here is 80% of his profits where he withdraw. Okay, now recently I had my student here, Ryan, share with our group, all right, our premium students, right, about what his lesson was when that allowed him to, you know, make this kind of withdrawals. You guys want to learn or not? You guys want to know or not what he actually said? You guys want to know what he actually said? I got him to share with my, you know, with some of my students in our close group sharing lah. Okay, so he was actually sharing. But you guys want to learn or not? Those of you who didn't manage to, you know, attend, or because you're not in the group. But my question is, do you guys want me to share with you what was some of the takeaways? Yes? Yes, you want to learn? You want to learn, just like let me know in the chat lah. Okay. I won't go too in depth, too deep. Okay, so yes. Okay, yes. Okay. But I want to share with you one particular thing that he mentioned that actually personally for me, I also forgot that he actually that I actually told him this advice. Okay, he said that before, so this one you know is a prop firm, right? Okay, now before he started prop firms, okay, I actually gave him a challenge, a personal challenge. Okay, what was this personal challenge? Hang on, let me just close the. Okay, we don't need to share this anymore. Okay, you guys see me now. Okay, so I told him to do a personal challenge. What is this challenge? I say that okay, he was actually struggling with discipline. What do I mean by that? He was struggling to hold trades for a long period of time, and every time he would enter a trade, he would go and look at the chart and keep on, he keep on have to stare at the chart. Let me just check in with you. Any one of you also face this issue, all right? Whereby you enter a trade, you must keep on looking at the chart. Okay, just say me if that is you. Okay, if that is you, just say me. Okay, Ryan, you're going to spoil the sharing already. I want to share the story, then you go spoil the. Okay, me. Okay, you when I say I say discipline. Okay, number one, you always have to look at the charts, and you cannot hold trades for a long one. Okay, is that you? If that's you, just say me. Just say me. All right. So Wonderland Misker say me. Only one person having this issue of having to look at the charts. Other people don't have such issue. Right? Having to share, having to stare at the charts. Any one of you? Well, that means this is not a common issue. Right? You enter the chart, then you can just leave it. You don't need to look, is it? Okay. Okay. Me. Yeah, me. Okay, so so got a few people. Okay. So this is actually something that should be very common. Okay. Because you feel kanjiong, right? You feel like, oh, after I enter already, I need to go and monitor, I need to go and see it, right? So Supreme Leader say set and forget. Okay, so this is not the main thing. Okay, now the main thing is what Ryan actually shared here. $100 challenge. This is what I want to share with you guys. Okay, I told him this. Do $100 challenge. And to be honest, before he mentioned it during the sharing, I forgot that I told him about it. All right. So what is this $100 challenge? I say, okay, Ryan, if you can grow this $100, you can double it. This is a sign or an indication that you are, I wouldn't say 100% ready, but you are on your way to be profitable. Okay, if you can grow this account, but the challenge is this, okay, you must grow it with still following the money management. That means it's not like you go and flip the account by going full margin. I'm not talking about that. You just grow a small account, and so this is the first thing. Second thing is what? Second thing is you must hold the trade for a long period of time. Okay, so the problem that people face, why they need to keep on staring at the phone or the charts when they enter, is because, and they cannot sleep. They feel like, oh, they have this anxiety with them. It's because you over leverage. Okay, you are using too big of a lot size when you enter your trades. So that's why you always need to go and check. You always need to go and, and your heart beats very fast. Okay, it's like a exercise. Okay, heart exercise. Okay, when you enter your trades, you feel very nervous, you feel very scared because you over leverage. Your lot size that you're using is too big for what you can manage. So if you are able to reduce that to 0.01 only, but the thing is that you're able to let that grow, you are able to, hold the trade for a longer period of time until it hit your take profit. This is the real challenge that you're gonna, that I intended for that challenge. It's not so much about flipping the account, but it's more of holding the trade for a longer period of time. So this is something that those of you who are starting out, who are intending, maybe you want to try prop firms, right? And you are having this issue of, hey, I cannot hold my trades for very long. Okay, I always feel very nervous. Try this out, right? The $100 challenge, as what Ryan mentioned, right? An amount that you can afford to lose, right? And also that you don't really have to see. This is to train or build your discipline, as I mentioned just now. Building the discipline, building or controlling your emotion. All right, I will mention, okay? Controlling your emotion. That's the main thing, okay? I never ask you to go and double your account in a day. Doesn't matter, okay? When you are doing prop firms especially, you don't really need to double your accounts every single day, right? Does it mean that you you cannot do that? Of course you can, right? Which reminds me, guys, okay? I actually have done a challenge recently, and how do I put it? Okay, so this challenge is a $100 challenge, actually even lesser than $100. okay, growing it into $10,000. Okay, guys, I'm in the midst of doing this challenge, and I would be releasing it on YouTube when it's ready. You guys want to watch or not? Yes or no? Yeah, you guys want to watch or not first? Less than $100 actually, right? Growing it to $10,000. So this is a new video that I'm about to release. You guys want to watch or not? Let me know in the chat. Yes. How long will it take for me to do this challenge? Oh, actually not very long. I started this last week. This week I'm already almost reaching already. Now I'm at 9,700. I started off with, okay, I tell you, I started off with about $80. Okay. As of that was last week. As of now, I'm about $7,000. Sorry, not $9,000, $7,000. Okay, so can it be done? Yes. All right, but do I advocate it for everyone? I would say no. Okay, imagine $100 to $10,000. Okay, it's not something that you can easily do, right? While managing your money, your risk management also. That's the important thing. Okay, so you guys want, I will share with you guys the video when it's released. Okay, just make sure that you follow me on my YouTube and you subscribe. That's how you receive the notification when it gets released. Okay, so I give you guys a sneak peek. I already mentioned to you already. I'm almost there. Haven't finished the challenge yet. That's why I cannot release it yet. Okay, but once it is released, once I finish the challenge, then I will put it on my YouTube. Okay, so if you have yet to subscribe to my YouTube, okay, just go to search Julian Yong Official. Right, go and subscribe it. You can also click on the notification icon, and turn the notification, the bell icon. All right, I don't have it here, but turn the bell icon to all, right, so that you receive notifications every time I release a new video. All right, so yesterday I released a new video as well. Okay, hopefully you guys managed to watch it. All right, you can see right here. Talking about the shutdown. Okay, shutdown is over, but then something worse hit the market. Okay, so go watch the video if you haven't. Okay, can okay, great. Okay, now, how you do it? How do I do it? When I release the video, then watch lah. I tell you how a bit hard for me to say lah. Okay, let me see. For that challenge, did you only trade gold or other currency pair? I only trade gold, guys. Yeah, I don't trade other pairs. I only trade gold. All right, so that is what I did. All right, so you want to know how I did it? Okay, like YX corner here. Okay, go make sure that you follow me, subscribe on YouTube, and enable the notification bell. All right, change it to all so that when I release the video, you get notified. Again, I haven't reached the goal yet. The goal is 10,000. I'm at 7,000 only. Okay, so hopefully maybe by this week, then I can edit the video, stuff like that. All right. Okay, so then I will share with you some of the lessons that I learned from that challenge. Okay, now again, I just give a caveat. Would I recommend that for everyone? Okay, I would say no, because you need to know what you're doing. If you are just starting out, you want to go and flip into $10,000, I think it's a bit of a challenge, right? Especially you are learning. So please don't do that. Okay, now let's talk a little bit about how come you are able to do that with gold. Not with gold, sorry, with Forex. Okay, what is the difference that Forex have? Okay, that something like if you want to invest in stocks, right? How come you need more capital, right? So the one thing that you need to take note of, just make sure that I'm sharing my screen. Share screen. Okay. All right. So one thing you want to take note of is the leverage. Oops. Okay, very importantly, guys, leverage. Okay, this one. Okay, if you are using a brokerage with a small leverage, then you can forget about trading with $100. Okay, I tell you all first. Okay, usually a normal broker will usually be able to do 1:100, for example. Okay, what does it mean? For those of you who are new here, don't know what is leverage, right? What does it mean? Basically, if you have $100, for example, okay, e.g., you have $100. Okay, if you have a 1:100, your broker allows you to have 1:100, meaning that with $100, you are able to trade a $10,000 account. 100 times 100. Is it correct, my maths? $10,000 account. Right? So imagine how much more you can do with just a $10,000 account. Right? Of course, if you have $1,000, then you are basically able to trade a $100,000 account. Right? This is the leverage. Okay, again, this is for usual normal brokers. Okay, I'm not going to recommend any broker here. Okay, just for you guys to understand. But I want to say something. If you are using a MAS regulated broker, okay, MAS, everyone type in the chat, MAS. Okay, MAS regulated broker will not have 1:100. I repeat again. MAS regulated broker will not have 1:100 leverage. Usually, MAS regulated broker, especially if you trade. Okay, so I'm just writing here. MAS regulated broker. Okay, usually will have a leverage of 1:20 for Forex. Okay, or 1:5 for gold. Okay, I repeat again. MAS regulated broker usually only have a leverage of 1:20 if you're trading Forex currency pair. Okay, when I say Forex means the currency, GU lah, GBP USD lah, Euro USD lah, GBP JPY. These are Forex pairs. Okay, so the leverage for that is only 1:20. And if you trade gold, it's even smaller, 1:5. So if you think about it, if you are having $100, you want to trade gold, right? Okay, you times 5. Okay, basically your amount is only $500, right? Gold price is $4,085 right now. Okay, guys, how can you trade $4,500 or $4,000 over dollars with only $500? You cannot. All right. So this is the issue if you are trading a MAS regulated broker. Now, I'm not saying that you shouldn't trade an MAS regulated broker. In all honesty, I would say that MAS regulated broker is a good thing because you get to protect yourself with the government, right? But there is just a limitation in terms of the leverage that you can use. So you make your own decision. Okay, if I were to put it that way, all right, you make your own decision on what you want to use. All right. MT4 or MT5, is it MAS regulated? Okay, MT4 and MT5, good question by the way. But MT4 and MT5 is a platform. It's not a broker. Okay, so you cannot get that. Don't be confused. MT4 is the platform that you use to place your trades. But MT4 or MT5 can connect to various brokers. All right. So MT4 and MT5 is like a shell, empty shell that you can use to place trades, but it have to connect to a broker. So this broker is the one that is whether is a MAS regulated broker or non-regulated broker. You enter in your username, your password into the MT4 and MT5 account that is being created, and then you place your trades there. Understand? Okay, so MT4, MT5 is not regulated by MAS or whatever. It's the broker. I'm talking about the broker. Right? Most of the time, MAS regulated broker don't have MetaTrader 5 accounts that you can create. Usually only MetaTrader 4 accounts that can be created. All right, don't ask me why. I don't know, but this is like that. Okay, any questions so far, guys? Any questions so far? Let me know in the chat if you have any questions. Okay, so after that, later we will talk about, okay, if you have a bigger account, okay, let's just say $1,000 account, right? How will you do it versus if you have $100? Okay, so this is the next thing I can talk about. Okay, if I have $1,000, okay, how should I manage my trade? Okay, Okay. Meanwhile, any questions? Let me know in the chat. So with $100 leverage, all right. So with $100, with leverage is $10,000. If you use 1:100 lah, because 100 times 100 is 10,000 mah. Right? There are some brokers that offer even bigger leverage. For example, 1:1,000. These kind of brokers even better. So then, I mean, not to say even better, okay, but the more you can trade, like with $100, you now have 1, 2, 3 zeros. With $100, you can already trade $100,000 worth of capital. Right? With 1:1,000, but usually all these are non-regulated brokers. Okay, so you need to understand the risk involved with non-regulated brokers. I'm just telling you guys upfront. I'm not here to recommend any broker, okay? But this is the reality. Some brokers allow for this, 1:100. Some of these allows 1:1,000, right? MAS regulated brokers have lower leverages. FP markets. I've not used FP markets before, but I don't think they are regulated. So those of you who know or who have encountered, basically, how do you know whether regulated or not? If they offer 1:100, 1:1,000, confirm it's not like regulated one. Okay, that's the basic or the easiest way to see. All right. Yeah, not here to recommend any brokers. So you guys look at whatever you have and you just decide on your own. Okay. First, if you ask me, if you want to flip accounts, right, with a smaller capital, you have to use a bigger leverage lah. All right, 1:5, then you cannot do anything. Okay, you cannot even enter the trade. They will just say not enough money. Right. So if you think about it, if you want to use a MAS regulated broker, right, what's the minimum you need to have? Right? For MAS regulated broker, let's do some calculation. Okay. I would say at least let's just say 2,000, right? Times 5. Okay. This will allow you at least 10,000. At least 2,000. Because you see, price of gold is 4,000 already. And if gold keep on going higher and higher, then this amount that you have as capital needs to be bigger for MAS regular broker I'm talking about. Right? Understand, guys? Okay. Any questions so far? Let me know in the chat. Yes, no. All right. Let me know. If you have, then just ask me, then I can help to answer. If not, then we move on. Okay. Okay, doesn't seem like any question. Okay. Now, let's move on to this. Okay, if I have $1,000, how should I manage my trade? Okay. I would say that to answer this question, all right, I would say that it have to depend on your level of experience when it comes to trading. Okay, personally, if I have $1,000 and if I want to grow my account fast, right, I would risk higher amount. Okay, usually you hear me say, oh, risk 1%. Okay, if you have $100 and you risk 1%, you are risking $1. Right? If you risk $1, you're not going to be able to grow your account. It's not. I mean, it's possible, but it's very, very slow. Okay, if you have $100, you better risk more in order to grow faster. So if you have $1,000 and you are learning from scratch, you are a beginner. Everyone type in the chat, beginner. Okay, that means you are still unsure of how it works, still unsure of how to enter trades, stuff like that. I would say, right, this is my advice to you. Split your account. Right? What do I mean by this? So you have $1,000, split it into 10 accounts. Okay, e.g. 10 accounts. Right? So don't straight away go and deposit the full amount. You can keep some in your wallet first, and you only deposit, for example, $100. So essentially, you are running a $100 account. Okay, this gives you chance for you to fail because again you are learning. right? This gives you chance for you to fail. If you lose, you're just losing $100. Okay, but if you're able to double that account, $100 you can grow it to $200. Okay, then that shows that you are profitable, which is a good thing now. All right, so when you have $1,000, you split it to 10 accounts, you have 10 chances to lose, to blow your account. You guys understand what I'm saying? Okay, again, this is for those of you who are beginner. Split your account. If you know how to do it, you know how to manage your account already, then work with your 10,000, with your 1,000. Okay, but still, importantly, I would still say manage your risk. Manage your risk. It's still the important thing. Okay, whether you are using your own account or whether you are doing prop firms, managing your risk is one of the key factors. Okay, now what is the risk that you should be looking at risking? Okay, for $100 account, I would say lah, okay, 20% I would say is okay lah, right? 10-20%, because you think 10 to 20%. Okay, for $100 account, if you are risking 10%, is $10 or $20. So if you risk 20%, essentially you have 5 chances before your account blow, right? For $100 account. Okay, if you have $1,000 account, then I would say keep it or cap it at between 5 to 10%. $100. Okay. If you have $1,000 account, okay, cap it to 5 to 10%. Unless you say that this $1,000 you don't mind losing, okay, then you risk more. That's the only thing. The decision should lie between, all right, how willing are you to lose that money? Because the more you're going to be risking, the higher chance you are going to blow it. So if you say that, okay, $1,000, never mind, I blow it, so never mind. And then you can risk more than that. Okay, understand so far? It all has to do with your risk. If you over risk too much, right? In your first trade, let's just say $1,000, you already blow 500. You only got 2 chances. Right? You 2 chances fail, fail already. Bye bye already. Right? So it's based on how much or how much you're willing to lose. That's what I have to say. Okay, but the goal is for you to double it, at least double it. Okay, when you are new, don't care, doesn't matter how fast you take, right? You just double it. If it takes you 1 week, 2 weeks, 1 month, is good enough already. Okay, so far, any questions, guys? Yeah, manage your risk. Any questions so far? Okay, I want to share with you one thing. Okay, wait, before that, you just let me know in the chat first. Any questions that you have? Any questions? Let me know in the chat. Yes, no, yes, no. Got question or not, guys? Okay. If no question, I want to show you guys something. This is something that, hang on, let me see how I can share with you guys. Replace screen sharing. Okay. Okay. Can you guys see my slides? I mean, not my slide, but my Google Sheet, right? Okay, so this is what we call as a compounding calculator. All right. So I show you guys. Okay, if you have $100, okay, if you risk, just now we say, right? What's the risk that we say? 10 to 20%. Okay, let's just say you are risking 20%. Okay, 20% growth. Okay, risking, let's just say 1:1. Okay, and you minimum can grow it 20%. Okay, every single day. Okay, I want to show you. With $100, essentially you are able to turn that $100 into $10,000 in just 26 days or less than 26 days at 20% growth. So is it possible? Let me ask you guys. Just now you asked me, hey, you growing a less than $100 into $10,000. Is it possible? What do you guys think now? Is it possible or not? You see for yourself. That's why I want to show you whether is it possible or not. What do you guys think? Possible or not? I'll highlight for you. Okay. Can you guys see? In less than 26 days, 25 and a half days, you are able to do that already. Okay, possible for skilled trader. Right, and this is just risking or this is just aiming for a 20% compounding growth every single day. You look for it, look at yourself, you look and see for yourself, right? So $100, 20% is you're profiting $20 ma. So then you are starting off with $120 the next day, right? The next day, $120, you risk another 20%, or you aim for another 20% growth, $24 profit, 144, right? So it's 20% of that day's balance. Right? Within 12 days or 13 days, you are able to reach 1,000. Okay, and I tell you that when you are able to have 1,000 and more, right, it's going to be easier for you to grow. Easier to reach the 10,000. $1,000 to reach $10,000 is easier. So the challenge is usually the starting point. Right? Growing this $100 into $1,000, that's the challenge. Because you know the amount that you have is very little to start off with. But is it possible? Look at this, it's possible. All right, of course, if you have more, let's just say $1,000, okay, and you aim for 10,000, sorry, not 10,000, 10% growth, okay, let's see how long does it take for you so that 1,000 just 10% only 10% daily target right, you are able to reach 10,000 in 25 days. Oops. Let's see. 10,000 in 25 days. Can you guys see? Or slightly less than 25 days. Okay. Yeah, you can reach 100,000 in 49 days. Right? Which, if you think about it, 49 days, assuming that you have 20 trading days in a month, right? 49 trading days is just 2.5 months. Yeah, 2.5 months. Your 10,000 can become 100,000 or 48 and a half days. Right? So it's possible. Is it possible? It's definitely possible, guys. It is possible. Okay? It's possible. I'm not talking about risking 50%. This is just 10%, guys. Right? But this is the power of compounding. As you can see here. Okay? But must be sniper. Don't really need to be sniper as long as you can do 10%. It's not right. Yes, but need to know what you're doing. Exactly, this is what I'm trying to say. Okay, exponential growth. So I'm just showing you the possibility of what can actually happen with a small account. And if you are able to grow a small account, I would say that this is able to build a confidence to grow a bigger account. Right? When it comes to bigger account, okay, let me share with you guys. Let me do this. When it comes to bigger account now, there is even more you need to manage your money. You cannot be risky. As I say, you have $100,000 account. You cannot be doing 10% or 20% compounding. Okay, that is too risky. Okay, that is where you need to scale down the profit. The target, but it's also good enough. For example, if you have 100,000, if you're just risking 1%, that's already 1,000 already, right? Or 2%, 2,000, right? That is manageable. So the bigger account you have, if you have $1 million account, even 0.5% is already very, very good already. Okay, you guys get what I'm saying? So the smaller account you have, risk more a little bit, okay? Bigger, when you have a bigger account, lower down the risk percentage. Guys learning or not? Are you guys learning something so far? This is the difference on how you manage a smaller account versus a bigger account. Okay, you can, if you have 1 million, don't tell me you go and risk 10%. That is insane. Okay, insane. Daily, I'm talking about daily, I'm not talking about monthly, right? So that's why those hedge funds, those usually hedge funds, okay, when they say that their growth is like 5% per month, right, or 7% per month, whatever, that one is normal, not per month, sorry, per year, 5% per year, 7% per year, right, 10% a year. That one is normal because why? They are talking about billions, multi-billions, right, in terms of their fund size. So that's why they manage the risk accordingly to the percentage. Okay, make sense, right? Yeah. Small capital, risk small. Bigger capital, risk less. Exactly. Okay, good. All right. So you guys understand, Okay. Shall I look at the charts right now? You guys ready? If you guys ready for me to look at the charts, type in R. R for ready. You guys ready or not? Okay. Before we look at the charts, any questions? Any questions? Okay. R, all say ready. Okay. Before we look at the charts, any more questions about growing accounts, small account or big account? Just let me know. Going to waterfall to 4,000. This is your prediction or you asking me? What's your question? Are you telling me or are you asking me? What's the thing? Okay, all are. Okay, no more question. All right. Okay, so if no question, then let's see the chart. Okay, so let me share my screen. How do I do this? Give me a second. Sorry, guys. A bit lost as how to do it. Okay, great. Okay. So this one, I just move it at the side. Okay, let's have a look at the charts. Okay, clear off everything. Remove. Okay, let's have a look. So right now, looking at the weekly perspective, let's do some analysis. Looking at the weekly perspective, what we can see is that gold is currently in a sideways trend, right? However, I would still say that it is still respecting the support, which means that it's still creating lower highs and lower lows, right? You can see, sorry, higher highs and higher lows. All right, you see here, pump, right, pump, pump. Okay, it's still not downtrend yet. It's only downtrend if this area here is broken on the weekly. Okay, so if you ask me what's happening, let's go and see in the daily. So on the daily, right, we can see that initially gold was creating higher lows, higher highs, right, market structure. Okay, what happened is that gold did a breakout over here, okay, and created lower lows and lower highs. So this is a lower high, this is a lower low, okay, and then started being sideways until boom, a breakout happened. So this area here, let me draw this area here, which is a lower high, has now been broken out, right, creating a higher high here. So in this sense, what I'm seeing right now is that gold does have a potential to still continue its way up. All right, as long as this area here is being respected. Okay, as long as this area here is being respected. This is like the last support, right? Because if you look at this happening, right, this would mean that a lower low is being created, therefore invalidating the higher high that's being created, right? Higher high means supposed to go up, but then if it doesn't create a lower high, higher low next. Okay, what it's supposed to do is it's supposed to create like this, right? Higher low to continue its way up. But if it doesn't, if it breaks through this area here, okay, what's going to happen is that gold is going to go down even further. So until this area here breaks, okay, I would say 3930 around here, okay, unless candle closes below here, I will still consider it as being uptrend. Okay, bullish is still bullish. All right. However, what it's doing now is creating a retracement down in order to continue its way up. Understand so far? Okay. I see that it has the potential to come down here before it go up. But does it mean that it's downtrend? Not really. It's a retracement in order to go up. Okay, now, why is it that I say that it has the potential to come down here before it go up? This is daily, okay? If you look at it from the daily perspective, all right, how many of you here, you understand fair value gaps? If you understand fair value gaps, type in FVG in the chat. If you don't understand, type in no. Then I will explain. Wonderland Whiskers asks, can we say gold is bullish on daily but bearish in retracement currently until it breaks structure? Yes, I would say so. Yeah, it's a bearish retracement. Okay, seems like a lot of you understand fair value gaps. Okay, no. Okay, Rick says no. Okay, how many of you don't understand? No. Type in. If you don't understand, type in no. Then I explain. If you understand that, I don't explain already. Okay, so you have 2% that says no. Okay, Rick says no. Charles says no. Okay, I just quickly explain. So, fair value gap is basically a 3 candlestick pattern whereby we look at, let's see if I can draw it. Okay, basically we are looking at, hang on, okay, let me delete this. We are looking at 3 candlesticks. First one here, first one here, second one here, third one here. Okay, the important thing to look at is the middle one. How do you know whether this is a bullish or bearish fair value gap? Right, you need to look at the middle one. The side one, first and the third one, whether it's red or green doesn't matter. The important one is the middle one. Okay, so in this case right here, let me just clear off all this now. Very ugly. Okay, in this case right here, this is what we call as a bullish fair value gap. And what we want to look out for is, we want to look out for the top wick of the first candle and the bottom wick of the third candle. Anything that is inside here, all right, anything that is the gap here, this is what we call as a fair value gap. Okay, so over here, this is basically a daily fair value gap, right? Because this is daily. Okay, so what does it mean actually, right? What does this fair value gap mean actually, right? So it's actually formed when there is a huge push to the upside, right? So for example, price is here, okay, then suddenly huge candle, bullish candle, right, pushing the price up. So inside this area here, there are what we call as orders, right? A lot of buy orders that are inside here, they have yet to be collected. All right, so we expect that price come down, collect all these orders, right? Collect all the orders here before pushing up. This is what we expect, right? However, this is considered as invalidated if the candle closes below the fair value gap, right? In this case, if it is a, let me just change the color first. If a candle closes like this, like, yeah, okay, like that, okay, if the candle closes below, it's considered as invalidated. This bullish fair value gap is invalidated. Okay, understand so far? All right, so right now, can I ask you, is the fair value gap invalidated? Yes or no? Is it invalidated? Yes or no? Which time frame do you use? You can use any time frame. All the time frames will have one. All right, but now I'm looking at it from the daily. All right. Okay, so guys, let me ask you, is this daily fair value gap invalidated? Yes or no? No, it's not, right? As of now, it is not, okay? It is not, right? So we don't care about the wick, right? The wick can come all the way down here before going up again. That's fine. As long as it doesn't close, the candle body doesn't close below, we consider it as still valid. However, okay, let me just see your question first. Huh? So with the wick there, money still not taken, or is it valid? All right, so here what this means is that price is coming down, collecting all this already. Okay, and but you can see that it didn't push up like it's supposed to. Candle close inside the fair value gap. So here's the thing, all right? Candle body, okay, did not close below the FVG yet, but candle body, okay, closed inside FVG as of now. So this means that there is a higher chance that this fair value gap may break. Okay, it doesn't mean 100%. Okay, doesn't mean 100%, but it has a higher chance that it may fail, meaning that it may close below, because candle body already closed inside. But is it possible that suddenly it push all the way up and go up again? Yes, it's possible as well. Right, as long as it is still valid, no candle body close below, is considered valid. Understand? Okay, so I show you an example. Okay, I show you an example. Right, so this one, first candle, second candle, third candle. The one in the middle here is called as a fair value gap, right? So fair value gap, right? Can you see fair value gap? Okay. So when we see this bullish fair value gap, what do we expect price to do? We expect price to go up or go down when it comes inside here? Do we expect it to go up or go down? For this bullish fair value gap over here, do we expect price to go up or do we expect price to go down? Okay, Ivan say go up. Yes, we expect price to go up. Exactly. So over here, can you see, did price actually go up? Right, you can see this price came inside here. Okay, next candle, price took all the orders inside here. Right, all the orders, but did the candle body close inside the fair value gap? As of this candle, did it close inside the fair value gap? Yes or no? As of this candle, did the candle body close inside the fair value gap? This candle here. Go or not? No, right? It didn't. Okay. So as of this candle, it respect. So that's why you can see price still go up. Right? Price still go up. Until when? Okay, you see price still go up. Okay. Until when? Until the fair value gap is eventually broken. When is it broken? This candle here. Can you guys see? This candle here, right, broke through the fair value gap. Right. So when you break through the fair value gap, you already know that since the fair value gap failed, price wants to come down. So what happened after that? Right? Can you guys see? After you broke through this fair value gap, another fair value gap was formed over here. Can you guys see? First candle, second candle, third candle. This is a bearish fair value gap, right? Bottom wick of the first candle, all right? Top wick of the third candle. Fair value gap here, right? There's a gap in between, right? So for a bearish fair value gap, where do we expect price to go? When the price come back inside here, where do we expect it to go? Up or down? For this bearish FEG, where do we expect price to go? Okay, down. Exactly. So notice price on this candle here, price come in, take the orders here. Let me zoom in a bit. Okay, you guys see? Price come in, take the orders here, went down. All right. Price try to come in again, right? Went down again. You can see? Right? Price came down here. Until when? Until this candle broke through the fair value gap. That's when we know that price want to continue going up because there is a bullish pressure pushing up, and therefore this was when this fair value gap was created. Understand? So right here, okay, right here, I would say that if this fair value gap is respected, price will continue to go up. But if it breaks, it will go down. It's just that now that it closed underneath, it has a bigger chance, a higher chance that it may fail the entire fair value gap. Doesn't mean 100%, but you just have a higher chance that it may fail. All right, so this is what I see for now. Okay, now one more final thing before I wrap up. All right, can you see here? There is another gap that's happening over here. First candle, second candle, third candle. Can you guys see? All right, let me ask you, is this fair value gap valid? This fair value gap here, is it valid? Yes or no? Is this a valid fair value gap? Yes or no? Okay, Ivan say valid. David say no. Okay, why no? Why no? Okay, a lot of people say no. For those of you who say no, why no? That's the question. Why no? Because the three candle is green. What do you mean the three candle is green? Or the third candle is green? No, the third candle doesn't matter. Okay, if this is a bearish FEG, okay, this candle here and this candle here, the color doesn't matter. It can be red, it can be green, it can be green here, it can be red here, doesn't matter. The only thing that decides whether it's a bearish or bullish FEG is the middle candle. So this one and this one doesn't matter. Right, so that's not the correct answer. Okay. This one is the correct answer. Have to wait until the current candle close, because can you see right here? This is today's candle. This is a daily candle, which means that as long as this candle is still moving, that means daily candle has not closed, we cannot consider this fair value gap as valid. Is it possible that price suddenly go all the way up before coming down again? Right, because today haven't end, right? Is it possible later it suddenly shoot up, price shoot up and then coming down again? Is it possible? Yes or no? Is it possible, guys? Right, David said possible. Right? It's possible. So if price go up and come back down again, is there any gap that is formed? Right? There's no more gap that is being formed already. So how can you say that? You see, if it close like that, there is no gap being formed. You get it? So you cannot say that this is a valid fair value gap until this candle is closed. So anything can happen. Right? Price can suddenly just shoot up and decide to come back down again. Right? We don't know. So if that happens, there is no gap in between here. Understand, guys? Understand? If understand, type in U for understand. So I'm just showing you guys, all right, a little bit about what I see for now. Okay, so looking at the 4 hour, right? Again, you will also see a lot of fair value gaps. For example, like this, right? So this fair value gap is still not taken yet. So is it possible that price come here, right, before coming down? It's possible. This is still untouched, right? Price has yet to come in, collect the orders here, right? Price is going to act as a magnet, right? So it's going to come inside where all the prices are, collect the orders before coming out. So this is a possibility as well. If you look at the previous fair value gap, I'll just show you guys here, right? See what happened here is that price came in to this fair value gap, collected all the orders before pushing up, right? After it collect all the buy orders, it push up, but then it realized that the sellers were stronger. There's not enough buy orders to continue its way up. Therefore, it went down. It broke through this fair value gap, therefore invalidating the fair value gap here. Understand so far? Right. So this is what this is what you can learn. All right, right here, this is a resistance. So in order for it to go up to this fair value gap, it has to break past this resistance first. Okay, let me just draw it for you guys. So for example here, okay, in order for it to go up, this resistance here have to break. So price have to go up, do like that, collect the orders before coming down. This is what's happening. So today, I would say gold is very much sideways in a sense. You go inside and see the lower time frame. It's very much sideways. It's like going up and down, up and down, up and down, right? Yeah, very much sideways. I draw a trend line here, right here. Okay. In order for you to decide on whether you want to go up or not, you have to show solid breakout before you continue this way up. Collect the orders here, right? Then come down. Oops. Yeah. Okay. If not, if you respect this trend line here, there's a possibility that it also straight away come down. But in order for you to do that, this area must break first. So think about it. There is some level of support or resistance that you need to break before it can go up or go down respectively. So this area here is a support that if you want to go down, this area have to break first. So right now, just moving sideways in a sense. Okay, Ken? Any questions that you guys have? Right. It's a bit, I would say if you ask me, it's a bit confusing because like over here, before that it was going down, then after that it didn't really respect this area here. It actually broke above before going down. Right. So it's a bit confusing. So in actual fact, it's sideways. Okay. If I were to just put it in plain and simple terms, it's just going sideways, deciding what to do. Right. Now, why is it doing this? Actually, if you ask me, I foresee that gold is actually waiting for the bigger movement that is to happen. When is the bigger movement? Bigger movement would be on Thursday. All right, on Thursday, there's going to be NFP, there's going to be unemployment rate, there's going to be FOMC meeting minutes. This is not FOMC, it's not the same as FOMC, but it's just the meeting minutes. All right, it's still high impact news, right, but this is at 3 a.m. These others are at 9:30 p.m. Okay, unemployment claims here still written as tentative. Flash manufacturing PMI and flash services PMI on Friday. Right, so I see that usually gold is kind of playing sideways until these events lah. Yeah. Okay, so until there's a clearer direction, I mean, you can just trade just straight up and down here lah. Okay, can understand, guys? Is this helpful for you? Is this helpful for you guys? Are you guys learning something? Good. Is this good? All right. If good, guys, can you help me out? Share with me what is your biggest takeaway for today. Something that you learned. Maybe something new, something something that impacted you for today. Let me know in the chat, guys. Okay, then we can wrap up. Because I don't want this session to be, I just share and then you just listen 1 year and then go out and forget, right? I want you guys to be able to take away some things. So I don't know what is important for you. Everyone's going to be different. What is important for you? What was your takeaway that you found important for yourself? Just let me know in the chat. All right. FVG. Okay. Let me see what's requested here. So when a new FVG is formed, prices tend to go towards the FVG to collect the money first. Yes. Is this Arisha? Is it you, Arisha? I see AY, but the username don't know why it's so funny. When new FVG is formed, prices tend to go. Yeah, it does. We don't know when it will collect, but it will gravitate to there because these are what we call as the price acts as magnet, right? YX say risk management. Oh, very good. Identify FVGs. Okay, Chen say FVG. Didn't say first view. What does it mean by first view? Yes, Julian. Okay, very good. First view. What does it mean by first view? I don't understand. Okay, any other questions that you guys have? Okay, if you don't have, just let me know your learnings, guys. Share with me your learnings for today. Hopefully, this session has been impactful for you. Multi-time frame analysis, all right, and risk management. Okay, very good. And you notice how I actually use multi-time frame to decide what to look at for the chart, right? And also the important thing I want to share also was the compounding calculator. You guys saw that, right? You guys see the possibility. Don't need to risk too much. Hey, even if you just aim for 10-20% with a smaller account, you can still grow your account quite big. How many guys think that was pretty mind-blowing? Right? If you can grow a small account, then you can grow a bigger account. If you $100 also cannot grow, how do you expect to grow a $100,000 account? Correct or not? Okay. All right. Thank you for your golden nuggets. Gold analysis is very helpful for beginners. Keep your account small or split your account. Yeah, that will help you to manage your risk now. So that's also part of risk management, right? Power of compounding. All right, grow a $100 account. Okay, very good, fantastic stuff. All right, so if that is all, okay, I would say thank you for spending your evening with me. I haven't had my dinner yet, so I'm gonna go grab my dinner really soon. Hopefully this sharing has been really helpful for you guys. Okay. Wonga says thanks for the great sharing. Thank you again, guys. Okay. Yeah, with that said, hope to see you guys in the next live. This is Julian signing off. Bye bye. Have a great rest of the evening.